Hey, what's up, everyone? Welcome to this week's Fuse Network Meet session. You're here with me, Ian Kane, and in this session, we're going to be chatting with Gabriel from OpenLeverage. I hope everyone's doing great out there this week. It's been a little bit more of a positive week in the crypto markets, a bit more green around, so there's probably a few more happy faces, but not too happy, I hope, because we don't know what's happening out there right now. So just a reminder that we record these sessions for later digestion or to unpack any of the more complex topics that we dive into during the session. And if you head over to the Fuse Network YouTube, you can find a whole ton of videos similar to this where we dive in, we talk to projects, and we try to get a better idea of what they're all about. So let's do a little quick sound check. Gabriel, have I got you there? Is everything good? How are you doing today?
Yeah, good, man. How are you? Good to be here.
I'm doing all right. I'm super hot. Like it's really hot on my side today, and I've had to turn the fan off so we can do the session. So forgive my red-faced appearance for throughout all the way. But yeah, all right, cool. So firstly, I just want to say this is an AMA session. So the idea is that we're digging in to the relationship between Fuse and OpenLeverage and what this means for devs building on Fuse and end users of our dApps as well. We'll outline what OpenLeverage is and does, and more importantly, what problems it's solving in the cryptoverse. So for those that don't know about Fuse, maybe this is the first time you've tuned into a Fuse Network Ask Me Anything session. Fuse is a unique blockchain that aims to bridge the gap between crypto and the real world. The platform has its own features and tokens that will help you in creating a crypto economy. And they've been in the blockchain space for a hell of a long time already. And we're working tirelessly to upgrade products and features. Our approach to bringing crypto payments and DeFi to the masses tries to empower other projects, businesses, organizations, and communities. We know that they want to adopt crypto payments and DeFi, and we know that they need to do it out of the box. So with that in mind, it's time to welcome today's special guest. And as I said, we're welcoming Gabriel from OpenLeverage. So Fuse is starting to work with OpenLeverage, and we're here to talk about that partnership, how it looks, recent updates, and why it's a good move. And just as a kind of jump off point, what we're going to be talking about here today is margin trading, which has been a key feature of traditional finance for a long time. And even centralized cryptocurrency exchanges as well for a long time. However, it's not easy to be enabled for trading on DEXs or decentralized exchanges, as complicated smart contracts are needed to handle the multiple tasks. So in that vein, we've got OpenLeverage Projects has been at the forefront of overcoming these obstacles and making leverage trading possible on DEXs. So we're really thrilled to have Gabriel here today and to talk about all these things. So let's dig in a little bit, shall we? But let's start at the beginning, Gabriel. Let's leave the complex tech talk for a couple of minutes. I'd like to know about you, my man. I'd like to know, what's your background? How did you end up in this crazy blockchain space, as we call it? Where have you come from? And yeah, tell us a bit about yourself, man.
Yeah, sounds great. I think that's a decent introduction. My background is actually in finance. I've always been that traditional finance bro. And I made the switch to blockchain maybe about a year ago. I used to be a bond trader. I was based in New York, but I was always sort of looking at the crypto market in the background, always really interested. I probably got into crypto, I would say late 2017. So that first cycle that we had, and then everything sort of blew up in early 2018. And I think I was leading two lives at that point. I was trading for my full-time job during the day, and I would just get home and just like trade pretty much all night. So I would say I would not recommend that. Pretty bad for your mental health.
Pretty bad for your health, right?
Trading around the clock, literally. And I sort of stayed with crypto in the background, and I stayed in that finance job for a little while longer. It wasn't the right time to move yet, but about a year ago, I made the official switch into blockchain, and I joined OpenLeverage. This project specifically a couple of months ago. And I would say that what really brings the team together is we have a lot of traditional finance people, but we also have a lot of like really hyper-focused blockchain professionals. So we have a nice blend of these two sides of the equation. But I think that what really brings us together is our love for anything markets. So we're always looking at the market and really interested in sort of these forces of supply and demand. And not only that, but I think creating a really powerful trading tool for individuals, and a tool I would say that incorporates the full spectrum, like your beginning trader and all the way up to your institutional trader. So that is sort of the goal for the platform and what we're trying to create.
All right, nice. That's a really super interesting background story there, Gabriel, as well. Like coming from traditional finance. I mean, can I ask, what was it that kind of caught your interest, as it were, because I've also got friends that work in stocks and bonds, and they are quite captivated by crypto, but they don't do it for a job. But something's quite appealing there, right? What was it that kind of caught your eye?
Yeah, it's a good question. There are some really appealing things to crypto, and it really, I think what caught my eye specifically was challenging this notion of why do we, I'm that person who always like, I get into a job or I get to a situation and I say, why are we doing things this way? Like, why couldn't things be done this other way? You know, like
Okay.
why does a market open at 9 and close at 4? I mean, that's really good for us traders. I'm not going to say it wasn't nice, but if I'm a customer and want to offload these bonds or something at 2 in the morning, why can't I do that? You know, it is a digital age.
Yep.
Some things are open 24/7. You know, access to liquidity should be important. So why are we still sort of working on this legacy system, even though everything is moving digital, everything is moving towards the internet and sort of this globalized system? So I was always challenging why we did things that way. And I mean, banks are slow moving and crypto was sort of new and exciting. So that definitely
Yeah.
played a role.
Yeah, I suppose once you're kind of entrenched in that traditional world, you're always kind of looking around to see what's kind of popping up in terms of innovation. And I suppose this is the kind of next iteration of what you've been doing for such a long time. So it makes perfect sense to me why it would be appealing, man. Like I just always like to find out but to me, it sounds like you're a big, you want 24-hour markets, like this no sleep. It doesn't bother you, right, Gabriel? You're up for this.
Oh man, I used to be up for it. I think now I understand the value of sleep above everything else, man.
The value of sleep. This is a book title that somebody should write, right? Like it's a big
Exactly.
thing. All right, cool. So we kind of dived off there and just jumped into sort of who Gabriel is and where he's come from. So I think that's, for me, it's one of the most important things about these sessions is to get an idea of who the humans are behind the projects. It's very easy to see a website, a Twitter, anything, and try to conjure an image of a brand. But for me, it's always great to actually speak with people. So I want to ask a newbie question, and I just want to get this out there early doors so that we can nail it. We're going to be talking about margin trading, and some people listening in on this call may not know what margin trading is, Gabriel. So can you please give us a, how do I say, the idiot's guide to margin trading would be excellent. Just a quick one.
No, absolutely, man. I'll preface this by saying that, you know, not everyone needs margin in their lives. You know, people are perfectly content to trade with the money they have and the funds they have. That being said, I don't think that leverage by itself is a bad thing. You know, if you have a mortgage to buy your house, you've taken on quite a bit of leverage, and that has allowed you to purchase a home. You know, you can take out a student loan to go to college, and that might not necessarily be a bad form of leverage. But I think that labeling all leverage is bad is the easy way out, but I think that it can be quite beneficial. So leverage in a nutshell is taking on sort of borrowed funds to increase your notional exposure to an asset. Yeah. So that may be if I have $100 to trade, I would actually put those $100 down as collateral and take on another $100 to purchase an asset, and that would give me sort of that 2-to-1 leverage. So I'm doubly exposed to the price of the asset now. Now that works both to the upside if the asset goes up in price, but it also works to the downside. So if something were to drop in price, that would actually affect you by a factor of 2 as well. So it is careful to manage that. And also through leverage, you open up this possibility to go short. So you hear this term a lot, going short an asset, and that basically means taking an opposing view where you actually are betting on the price of something to go down.
Okay.
So I can say, hypothetically, I can speculate that the price of maybe Bitcoin will go down, and in the traditional finance world, we'll call that going short, where you are betting on the price to go down, and you'll profit that way. And the way that's achieved, I'd say, mechanically, if you will, is you need to borrow the Bitcoin that you're shorting. You would sell it at that point in time, and then you would look to rebuy it later on once the price of Bitcoin has dropped.
Right. Okay.
So once that drop occurs, you would repurchase your Bitcoin and then give that back to whoever lent it to you. And that's how you profit mechanically. Now, in order to short something, there's always this implicit borrow that happens. And that's a key thing to realize. And some listeners might be wondering, why is this important? Like, why should there even be a need to short? Like, why can't we just be perma bulls and always long? Wouldn't that be
That would be
better
nice.
for the overall market? Yeah, exactly. The price always goes up. I mean, I think that's true to an extent, but it's also a bit, I don't want to say naive, but it's a bit utopic. In reality, I think the market needs to move capital to projects that are really productive and beneficial and have clear use cases, and it should not give capital to projects that are quote unquote bad. We as a society should actively move capital to the good and the productive, and limit capital to those value traps or things that are really not producing anything. So an efficient market will let you do both.
That's one of the best explanations of leverage trading I've ever heard, Gabriel, if I'm really honest. And I think the analogy you used at the beginning, actually, about house mortgages would help people to understand in more depth about that they're probably already leveraged and they just don't know that. And I think that in the DeFi world, it's become a thing, hasn't it? And I know you were saying there, there can be a stigma attached to leverage trading because of the negativity attached. But personally, I feel that what DeFi did was put leverage in the hands of people that potentially didn't really understand what leverage was. And what's the word? Like the lure was too strong to resist, like double your gains. Oh, well, that sounds amazing, so I'll do that. So I do believe that it's a kind of victim of just inexperience, and that it came around a bit quick, and that people were kind of hopping on something. So that negativity, I believe, is caused just by a lack of kind of education around the subject. I think just in kind of trying to defend it, because I think a lot of people, I've seen a lot of articles that say never use leverage. It's like, no, you can use it. You just need to understand what you're doing, right?
100%.
Yeah. All right, cool. So we've got the kind of what is leverage trading. So that's a great jump off point. But we're talking about OpenLeverage here today and the platform. So first of all, tell us what is it that you do, and why is it different to other margin trading platforms?
Yeah, I think the thing to understand in crypto is volumes are just going up like exponentially, and they've been going up for the last couple of years. If you look at the volumes on exchanges, both centralized and decentralized, the amount of volumes has gone up tremendously. And up to a couple of years ago, there wasn't really a leverage trading product being offered in crypto until recently, when exchanges started offering what is probably the most popular exchange leverage product existing, which is called Perpetuals. Maybe you may have heard this term called perps. When you go on Binance or FTX or another centralized exchange and you see these like 5x, 10x, 100x contracts, those are usually perpetuals. Now, perpetuals are a bit different in that, without getting super technical, they are cash settled. So that means like they're tracking a price, but they're really the underlying token that's being traded, it's never really being settled. It's just being sort of cash settled. So whatever your gains are, you're being paid out in, say, USDT or USD.
Okay.
There is no underlying token being traded. And the second big thing to understand is that there's always a market maker. So if you want to take a view, say that you're going to be long BTC by 10x, there's someone on the other side who's taking the opposing trade. So whatever your profit or loss is, that market maker is essentially on the hook to be able to pay you out that profit.
Sure.
Or on the other case, you would pay out the loss. Now, the issue with that is that, number one, it is quite centralized. You are relying on this central entity to sort of make good on that promise of, say, profit. Hypothetically, that entity could maybe not be able to pay it. Now, that'd be a really bad scenario, but it's always a possibility. And it sort of goes against this ethos of decentralized finance.
Sure. Yeah.
And then the other big thing is that in these perpetual contracts, there's always a committee that's needing to decide which assets are being listed on the exchange. So what assets are we going to provide these perpetual contracts for? Like, what are we onboarding? And there might not be a lot of transparency to how these assets get added. It's probably being done by a committee of individuals, and it's totally at their discretion. And there's no involvement of, say, the users of the community in terms of deciding which assets get added.
Okay.
And the beauty of OpenLeverage is that we don't use perpetuals. We actually use traditional margin trading. And it's totally permissionless in that users can add any single token paired to our platform. So we're not relying on any centralized committee of actors. We're not relying on sort of any gatekeeping. Any token that exists on a DEX can be added to OpenLeverage, and there's an immediate market for that token.
Okay. Interesting. And so just as a sort of basic point, why is, if you're comparing perpetuals with what you're doing, what's the sort of benefit to the end user there of doing it in that manner? Because you're kind of taking a more traditional finance stance on the whole situation, which seems to be quite logical. But what's the kind of benefit package here? Like, what's the difference, I guess, as it were?
Yeah, I would say there's a couple of benefits. I mean, I think perpetuals are also fine. Like they also serve a different need in the market. But I think that one of the major benefits I see is you sort of keep the gains within the ecosystem. Now, because essentially, if I'm a trader and I'm taking a leveraged long, say I want to bet the price of something to go up, I need to borrow funds, and borrowing those funds comes at a cost to me. Like I'm paying margin interest. So on all the borrowed funds that I'm using for my leverage trade, I'm paying interest. In open leverage, I'd be paying that interest directly to the user who lent me my funds. So I sort of keep that value within the ecosystem, which I think is quite powerful. So you create this market of traders, but you also get to create this market of lenders, and everyone sort of stands to benefit in that situation, in those transactions.
Got it. Yeah, that makes good sense. So, okay. So thinking about the networks that OpenLeverage is deployed on. So different networks, we've got Ethereum, we've got different layer 1, layer 2. I mean, tell us a bit about the networks that you're deployed on, and if you've got plans to expand, and how you feel about the whole kind of multi-chain paradigm that has emerged of late. Well, not of late, really. I've been a big believer in it since day one, but how do you feel about that? Like, do you think it's the future?
Yeah, I think multi-chain is the future. And I think that's the strategy that we've been pursuing to date. We launched on Ethereum end of 2021, beginning of 2022. Unfortunately, if you recall, the fees on Ethereum were pretty much unusable at that point, and our
Those
product
monkey faces were killing the gas fees, right? Yeah, I remember.
Exactly, man. And we launched on Ethereum, and I mean, the fees were difficult, I think, for a lot of our retail traders to justify. So we made the decision to launch right after that. We launched on BNB chain.
Okay.
And on BNB chain is, I think, where we found most of our usage to date. I think it is a question of having low fees. I'll also say that we've received a ton of support from different entities on BNB chain. So that's really where OpenLeverage took off, I'd say.
Okay.
And we're also deployed on KCC, which is KuCoin's community chain. We found some success there too. And I would say that over the next couple of weeks, we are actively pushing other EVM deployments. So we do have Polygon, and I can actually give a timeline out for that one. Polygon.
Whoa, are you sure, Gabriel? Are you sure you're not going to get in trouble for this one?
Yeah, I'm sure. I've checked with the team. I think that's 3 weeks out, so we can call it maybe mid-August Polygon, and then actively looking at other EVM chains. But I think that is part of the strategy. I think that there's certain chains that lend themselves way better for sort of your DeFi users. We've seen some chains that are more about GameFi and NFTs. Others are more about sort of different functionalities within blockchain. But I think finding chains that are more DeFi specific has been valuable for us. But the approach, I would say, is definitely multi-chain, and we're not really limited by any sort of integration. Like we feel confident about being able to be deployed on a bunch of different chains.
It's interesting that you mentioned the NFTs there as well, because I was having a conversation with somebody yesterday about leveraging NFTs to release value as well, because I don't want to go into NFTs too much, but I just kind of want to get your opinion on the sort of liquid side of an NFT there, where they're notoriously very illiquid. So the idea of leveraging them as something that's come around, you use your NFT as collateral. Is this something that you think will catch on, or something that you even find interesting? Or do you think it's just another kind of stepping stone towards something much more interesting? This is just like, I don't know. What do you think about this?
I think it's interesting. There's a lot of things to be done with NFTs. I think, as you properly say, like the potential for them to be used as collateral is a big one. I do like that angle. I think if you look at the art world in the traditional market, it is very common for some of these big art connoisseurs to take out loans against their artwork, and that's totally something that banks will do. So I think that's an interesting space in and of itself.
Makes sense, right? Like in one way, especially what you say about the crypto art as well. We were looking in the Three Arrows Capital wallet. They've got an NFT wallet. It's got about 22 million quid's worth of NFTs in there. They've been collecting high level, and we were kind of like, what are they doing? And what we looked at it to see is if they could cover their losses. No. So that was the thing there. But sorry, I interrupted you. Yeah, just it's like an interesting topic, right?
No, 100%. And I think also, I'm sure there's a lot of people on the sidelines who would like to take on directional bets on, say, the price of CryptoPunks or Bored Apes.
Yeah.
But they might not have the capital to fully buy out one of these pieces of art, which no judgment there. Like, I don't think I would do it on my own accord either. But you might want to take a directional bet on sort of the price of one of these collections, and I think that OpenLeverage potentially could offer a product for that too. So it opens up a lot of possibilities for sure.
I think it's something that's going to evolve. Like, definitely not trying to put you on the spot. Just wanted to find out what you think about it, because I think it's quite an interesting concept. And obviously, there's a lot of NFT holders that are wanting some liquidity back from their purchases, perhaps at this moment in time. But like you say as well, like putting shorts on the price of a CryptoPunk in 3 years' time. I quite like to do that. It's quite an interesting idea. Anyway, let's jump away from NFTs, otherwise I'll get completely distracted. So we were talking about integrations a second ago, and we're talking about EVM chains, and you're looking for expansion. And obviously, I'm here representing Fuse Network. So let's talk about how OpenLeverage can and could integrate with Fuse, and what benefits that would bring to the Fuse. Sort of, there's two sides of it for me. There's the DApp builders, and then there's the end users. So if you could kind of outline a little bit, I mean, yeah, talk about how do the two companies, what's the synergy here?
Right. I think the really low-hanging fruit is for us to sort of offer the Fuse token as being able to be traded, and that's already live on OpenLeverage. So we're not integrated on Fuse, but you have a healthy amount of tokens, Fuse tokens on, say, BNB chain. A user can already trade those on Leverage, or they can similarly use the Fuse token as collateral to enter into a Fuse trade. So I think that already unlocks some potential for Fuse token holders. The possibility of OpenLeverage integrating with Fuse as well is always there, and I think that our teams have been in contact for the last couple of weeks, and it's something that we can always discuss. And yeah, like we're quite positive about EVM chains. I think that the space is evolving quickly. So we sort of follow the trends, the users, the builders, and we try to be opportunistic about being deployed in the right places. So I think there's a lot of stuff that we can do down the road.
Very cool. Very cool. I mean, yeah, I mean, we need to outline that. We're not talking about anything solid here. What we're talking about is the future of the relationship between the two companies. So it's important to outline that as well. Definitely, Gabriel. But why is it kind of good? Like, if we think about DApp developers building on Fuse, what we're trying to encourage at Fuse is real world implementation of Web3 applications. So we've got projects like Good Dollar. We've got projects like People that are really trying to do things that kind of, it's sort of grassroots level economy and trying to build it up from the ground. And I think Good Dollar is a great example because it's a very cool project. But what can OpenLeverage bring into that? You know, obviously we've got Voltage as a DeFi DApp. It can expand what it's really just about expanding DeFi features for Fuse users, really, isn't it? I guess.
Yeah. I mean, I think one of the most powerful things that OpenLeverage does for the average retail user is, I always focus a lot, we are a trading product first and foremost, but on the lending side, it opens up a really healthy lending market as well. You know, there's always this talking in DeFi about like the search for yield, and there's a saying that says, where is this yield like coming from? Like, why are these projects paying like crazy amounts of APY? And there's another saying that says, like, if you don't know the source of the yield, you are the yield. Essentially saying,
I haven't heard that one. That's a good one.
Yeah. If you don't know where the yield's coming from, you're the yield, man. You're the guy who bought and laid into this project. So the concept of sort of borrowing assets is quite common, and you see this in traditional finance all the time. And it is one of the easiest way to take any token and make it yield bearing. So I think we offer that. We offer this sort of natural yield, and you know exactly where the yield is coming from. It's being paid out by traders who are borrowing your tokens. Simple as that. And you're getting paid out a yield in the same native token that you deposited, and you can track that in real time and see how those rates evolve. So I think that that's a really powerful force, bringing on like real use cases and real yield drivers into the blockchain.
No, I couldn't agree with you more. We've seen so much kind of how to say fly by night kind of DeFi protocols and other things that kind of offering ridiculous yields that are not sustainable. And I guess, as we were kind of talking about earlier as well, it's that new industry. You're always going to get bad actors, but yeah, I guess what OpenLeverage can do is bring more transparency to that field and make sure, because it's been a big issue recently as well. Like people were started digging into ST ETH, for example, and like and they didn't really understand what they'd got into there. But then when they found out they couldn't sell it, they were quite upset. So it was like, you didn't know what you were doing, but now you're super angry about it. So yeah. Okay, so we're talking about tokens a little bit here, and we're getting into the tokenomics. So I wanted to find out more about, does OpenLeverage have a token? Do you have your own token?
Yeah, we do have a token. The ticker is OLE, so OLE. It is the official token of the platform. And what we're trying to do with the token, I think it is an integral part of our strategy. And what we want to do with the token is to decentralize the platform. We want to put the platform in the hands of our users. So that token, if you lock it into sort of this time escrowed contract, you will be able to govern the platform. And we offer a lot of different incentives. We offer like trading discounts to sort of your more heavier trader. We also offer lending boosts, so you can obtain a bit of a higher boost on your lended funds if you are a OLE holder. And you're also able to sort of govern how we play out a lot of these decisions across the protocol. And that's what we really want to try to do since day one. So we want to put this platform into the user's hands. So it is an integral part of the strategy, the token.
Okay, nice. I mean, can we break out the tokenomics to some degree and just kind of dive in a bit deeper there? I mean, how does the platform structure? Do you give rewards in your token for sort of staking, and just talk about some of the benefits for like users, basically? Yeah.
Yeah, of course. So the token is minted through platform usage. So the initial distribution was based on this community airdrop we did. So all of our faithful users we've had since the beginning, since we first launched, even on testnet, these users started accruing rewards, and we did a community airdrop at the beginning of July to sort of reward those early and loyal users. But the token really is minted through usage. So if you go on OpenLeverage today, you trade, you lend, you open up new token pairs, you perform certain actions, you receive OLE in reward. Now, OLE by itself is just the native token, but you actually need to lock the OLE to receive some of these benefits. And also to be sort of long-term aligned with the platform. So we want our users to be long-term aligned, and hence the time lock contract. And once you're locked, you receive what we refer to as XOLE, and that gives you full governance rights. At this point in time, you are getting sort of boosted trading, boosted lending. You're also eligible to receive a portion of the protocol's trading fees. So with a portion of trading fees, we are redistributing those back to the XOLE holders. And right now, the way that we sort of incentivize liquidity in the platform, it's done in a central manner where we get to decide based on usage what trading pairs we're incentivizing. But even that element, we want to decentralize and put it up for vote. So in the future, XOLE holders will get to decide how those incentives are being paid out through the platform.
Nice. So it's very similar to other platforms, whereby you want the community to play a central role in how you structure for the future, what's on offer there, what features they use, and kind of guided by your community, as it were. And the vesting period, as we call it, the lockup, is a fairly standard thing now, I think, as well, right? Where I actually
Right.
prefer platforms like that, I believe, where I see that as a thing, because for me, it's like a sign of safety. And to some extent, I'm like, well, they're not letting me run away with my token. So that's a good thing. Like, I think for people who understand it a bit more intrinsically, they kind of figure that out early. But for some, they're like, why vesting? Why vesting? Why staking? It becomes quite annoying for them, but it makes perfect sense, right? All right, cool. So we dived into the token a little bit, and we're just at the kind of halfway mark now. So I want to talk about the future for OpenLeverage. And I mean, everything's pretty fresh for you guys. Like you just mentioned the airdrop there, and when you say July, you mean July, like where we are now,
July
right? Yeah.
this year, correct.
How did it go? Like, was it successful? Did you? You mean you don't have to tell me if you hit any major road bumps, but did everything play out nicely? Was it fine? How did that go?
I think it played out as well as it could have played out in this market. It definitely went positively. We did catch a lucky window, so we were trying to launch the token, I'd say, for the last couple of months. The market was really not cooperating, but we found a good window of time where the market was sort of bouncing back, and now like it seems like it's fully risk on again. But for those
Mm,
sort of brief weeks in June and July, it was more challenging. But we found a good window. We launched a token, and I think our users are happy. You know, the majority of those tokens went to sort of our early users who've been using the platform a lot, and now it is free to trade. I would say that it's quite easy. I recommend users. So people ask me, should I buy Ole? And I say, listen, if you're using the platform a lot and you're an active user, it
yeah,
definitely makes economic sense to buy it because you can find certain benefits through being an ex Ole holder, where your trading might be discounted, you're making more in fees. So I would say definitely buy Ole if you're a loyal user of the platform, more so than just purely speculating on the price.
I get what you're saying. Yeah, it has utility, right? Like there's a benefit, there's an intrinsic benefit to holding it. It's not just a kind of, yeah, no, completely makes sense to me. All right, cool.
Exactly.
Yeah, it makes a lot of sense. And I think, okay, so one thing we have talked about is security. Obviously, we're talking about decentralized finance. We know there's a whole bunch of hacks and other things that happen. You hear about it all the time. And I just want to say about these things that generally we hear about these things more than we hear about the good things in DeFi because, well, people need to sell. I'll say they need to sell newspapers. They need to they need to get clicks, right? And we hear about these $10 million hacks and all these other things that happen. And what you don't hear sometimes is that actually it was like a white hat hacker that just was testing something out. And, anyway, I just wanted to put that point out there because I think it's quite important. But let's talk about security of OpenLeverage. Let's talk about the things you've got in place. How do you feel, talk to us about security on the platform.
Yeah, I would say security is the number one priority. And I think a lot of protocols will say that, but in our case, it really is the number one priority. We are dealing with a lot of different asset classes. A lot of different assets, not asset classes, a lot of different assets that can be deposited in open leverage. So that exposes us to a lot of vulnerabilities. So we need to make security our first priority. We do have 3 different audits from 3 different companies. We have Peck Shield, Code Farina, and I'm blanking on the last one. But we do have 3 different audits. Check our docs. We can link the docs in the show notes.
Yeah.
And I mean, up to this point, it has been battle tested. We also use a very sophisticated Oracle price Oracle system. I think a funny anecdote is, if you recall, during the Luna implosion, a lot of these central exchanges, they actually stopped trading Luna as it was collapsing, and they stopped trading right as we got into the sort of the tail end of the event. In their defense, it wasn't from the beginning, but OpenLeverage, I think, at the end ended up being one of the few places you could still trade Luna, and you can actually trade it on leverage still.
Whoa.
So
Okay.
our platform today is battle tested. We've dealt with a lot of market volatility, and the protocol has always performed fine throughout. So, and this is the function I'd say of our security, our sort of best practices, having a really capable product, a very capable Oracle price Oracle system. So Yeah, like, and we're constantly improving on that side of things. Like, as a user, it's sad because might not see all the advances, but there is a lot of stuff happening in the back end that's meant to protect you. Um, and that's the goal. Loss of funds would be, I think, a catastrophe for us. So that is the number one thing we wanna mitigate. And up to this day, I can say that it's never happened. And then the final point is, we do sort of use a portion of funds, from our trading fees. So fees that would go to us as a platform, we actually set them aside. We set a third of these funds aside into an insurance fund, and that
Okay.
would go to cover any potential, either vulnerability in the protocol, or maybe through like some sort of market volatility event. We had a case of losses that goes to cover our users as well. So we're setting that aside, from our fees, just to cover any potential upsets.
That's pretty nice, Gabriel. Not heard many people say that before. That's pretty nice. Like genuinely, like that's a great feature to have. Like, and it really
Yeah.
does. It really does show. Again, you wouldn't find that out from quickly scanning the Twitter. So again, like just to pull back to that
Right.
point, why it's so important to listen to the people who run these protocols and do this work is to find out these little gems of information, I think. So, all right, cool. I think we've done a really good job of kind of like diving into the protocol, what you do, how it works, what it's for, and the basics. So I want to know what the future's looking like for you guys. We're at the end of Q2 now. We're heading into Q3. Tokens are looking a little bit more positive. I'm not getting that happy
Mhm.
myself. But what's in the future for you guys? Like what's on the immediate roadmap, and what should we be getting excited about, basically, Gabriel?
Yeah. I mean, I think first it's going to be a couple chains. Like, we do have a couple chains in deployment. I mentioned Polygon. There's a
Yeah.
couple other EVM compatible chains, so definitely be on the lookout for that. If BNB or Ethereum mainnet is not your jam, be patient. We're going to have a couple more chains in the future. And I think on the other side, some users will trade up and leverage, and they'll say, this is a great product, but I'm not getting that sort of like Binance, FTX, that like centralized exchange feel where everything just feels like solid and tight, and I can get 100x leverage, and the UI UX feels like amazing. And I mean, fair point. It's hard to provide that same experience fully on chain, but I think if you give us enough time, we will be able to replicate that experience, and it's going to be seamless. So we are introducing limit orders for traders very soon. So that's like a fully on-chain limit order. Um, Way more functionality on the trading side, sort of to manage your risk and to sort of chart and use all these functions that you typically get on this centralized exchange. So we're going to be able to do that on chain. And I think that should get a lot of people excited, because then there will be no issues, like, why have my funds not arrived to the exchange? Like, where are my funds? Why can't I,
Yeah.
whatever. So we're
All
gonna
those.
provide
Yeah.
we're gonna provide that fully capable experience in an on-chain manner. And that being said, I don't think we're the only protocol doing this. I'm not gonna pound my chest and say OpenLeverage is the only one. I think there's a lot of really capable protocols who are building products, on chain. And I think in a couple of months or maybe years, a user won't even know. Like, it's gonna be so seamless that it'll work, and it'll be crisp.
I think that's where we're headed, right? Like it's the Web 2 feeling. It's Web 2 feelings in Web 3 apps, basically, is where we're trying to get
Right.
to now. And it's not going to happen tomorrow or next week or the month after, right, Gabriel? Like I think people are getting a bit ahead of themselves on this one, but I would always kind of send people back about 10 years to 2011, maybe somewhere around then, when mobile gaming was becoming a thing and most of it was trash. And then all of a sudden there was a sort of tipping point where everybody kind of realized,
Right.
oh, this is the way to success. And I think user onboarding is going to be pivotal to all of this. And as you rightly say there, I don't think anyone really cares what blockchain anything runs on or will care in the future either. And if you have to describe all of this, like, oh, it's on this EVM compatible chain, but you need this kind of wallet and da, 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 like you're going to lose most people. that point, right? So I think we've got to
Exactly.
get past that. So it's good to see right now that we're headed in that direction. But you also mentioned something there about Ethereum, and I just want to go off piste and ask you a bit of a random question. So that if Ethereum's not your jam, so Ethereum is not most people's jam, I would say, because it's so expensive right now. That's one of the biggest problems with it, that for everyday traders looking to move 500, 600 bucks around, it's a bit crazy. So my question to you, Gabriel, is really, how do you think, and you don't need to give any solid answer, but the future of Ethereum, do you see it as being a competitive blockchain, or do you see it as being the big daddy blockchain that everyone else is just feeding? I suppose that's not even a question. I've kind of given you my opinion, but what do you think, Gabriel, about Ethereum as a network and its future and what will be there? Will we see lots of dApps in the future on Ethereum? I'm kind of tempted to say no. What do you think?
I mean, personally, I'm quite bullish on Ethereum still. I'm not going to discount it right away. I think that for a new user who's just coming into the space and they see Ethereum, they probably rightfully think to themselves, why would anyone use this? And I think that's fair criticism. But yeah, I think I share the view that a lot of other people share, is that Ethereum will be sort of this global settlement layer. And in a couple of years' time, we'll look back and we'll say, like, I can't believe that you guys were trading on Ethereum. Like, I can't believe you guys were like settling trades on Ethereum, and that'll be ridiculous because that'll be reserved for these like really large institutions or these layer twos. And I think that that's what I wanted to allude to. These layer twos are sort of really the future of Ethereum scaling. And you see a couple, you see Arbitrum and Optimism as two sort of leading forces in the scaling solutions race. But right now it's confusing. I think for the average user, it's confusing to navigate, and that's given rise to some of these other popular layer ones. But I would never discount Ethereum at this point. I know a ton of smart people working in that space, and especially in the L2s as well. So I think it's interesting. Right now, I think for OpenLeverage, we are playing this wait and see approach. And sort of, it is a bit like the chicken and the egg, because there's not a lot of things happening on some of these layer twos yet, but there will be. But we are sort of using this wait and see approach, and we would love to integrate some of the layer twos to make our product way more accessible to the average retail user. So that's also something we want to do.
That makes sense. It makes a lot of sense. Yeah, I definitely am not discounting Ethereum. I think I probably didn't explain myself there properly. It's more about the view of Ethereum, I think, as being the, as you said, the transactional layer, the what is absolutely necessity to make everything else work. So as a network and a blockchain, I think it's the most important, but perhaps it will lose its I don't think people will be talking about it as much. Like, we won't speak on it, basically. It will just be the case that it works, right? But I always like to just get kind of like people's impressions and thoughts about the markets right now. Last question, random question. Are we at the bottom, Gabriel? You've worked in this field a long time.
Man.
Not financial advice.
Not financial advice. I have, and I'm gonna give a bit of a political answer, but I don't have a lot of faith in our central banks doing what they say they're going to do.
Okay.
So with that being said, I do think that the different central banks around the world are going to chicken out, and they're going to go back to quantitative easing. And I think that this party is going to go on for a little bit longer. That's my view.
Is that what you think?
So
okay, no, that's kind of that's interesting.
That would mean risk is back on the menu. That's my view, at least in sort of the short term. I would love to be proven right. I don't know what's going to happen, but I think at the same time, some people have taken this opportunity to be fully in cash. Some people have said, this market is crazy. I'm going to go fully into cash and I'm just going to wait it out. I will say from experience that being 100% in cash is equally stressful. Like,
that's a very good point.
Being in cash and seeing this bounce back, like, that will do a lot of harm to your mental psyche as well. So there is no free lunch. I would say be moderately invested, maybe have like 70-30 or 80-20, have some cash cushion so you can buy back into the dips, but to be completely out of the market is also super stressful.
I agree. I agree with you on that because people, you shift out and you think, oh, I'm safe, but I'm missing opportunities. So I'm not safe and I'm not happy. And it's that would have, could have, should have mentality that just entrenches crypto, right? Like I just find it to be, I find it funny, really, to be honest, overall. But again, not trying to put you on the spot. I just, it's an interesting question. And we have it's okay. We got away with it. All right. Nice. So we've come to the end of the session today, Gabriel. I just want to give you the one last chance to, not the one last chance, but an opportunity to, where is the best place that people can reach out to you? And maybe people want to get involved with OpenLeverage. What's the kind of channels? Where's the best places to connect with you guys? Let's have some shout outs.
Yeah, I would say that the number one place is our Twitter. That's at OpenLeverage. I think we'll link it here under the screen. You'll get to see it in a couple of seconds. Our DMs are open, so please feel free to reach out. We also have an email, which is help@openleverage.finance, where you can send any concerns you have regarding to the platform. Just send it over. We're actively using that email, checking that email and screening it. I would say as a user, check out our platform, put a couple of trades just for fun, just check out how it works. But what we really care about more so, I think at this stage than users just using the platform is we care about that feedback. So if you're trading and you notice anything or any features you'd like to see or something that just doesn't look or feel right, like drop into our Discord or send us a DM through Twitter and give us that feedback. Because I think at this point, even though we've been operational for the last couple of months, we're still trying to iterate and use that feedback to constantly improve the product.
Cool. Yeah. Okay. Awesome. So Discord, Twitter, they're the best places to reach out to these guys. And as Gabriel said, if you find something you don't like, or you find something that's a bit buggy, let them know so they can fix it. All right, cool. So we've come to the end of the session. I just want to say thank you, Gabriel. Excuse me. Just want to say thank you for taking time out today. I know it's super early where you are as well. I'm at the end of my day. I think you're at the beginning of your day, right? It's like 7 a.m. So thank you very much. You can get your coffee now after this is all done. And I just want to give a big thanks to everyone out there who's listening. I hope you've all learned something today about Fuse and about what we're doing here as well. So I think, Gabriel, we've done a great job of explaining what OpenLeverage is all about, and most importantly, why it's beneficial for developers and how it could benefit Fuse in the long run as well. So from our side, I think like robust trading activity and Fuse's native Fuse token is essential to ensure accelerated adoption for Fuse tech in the future, and our kind of ambition of being this easy to use DeFi place. So yeah, it's good stuff. So thank you for tuning in, everybody. You can catch us all next week. We'll be back with another Fuse Meets. And just thank you all again, and keep it locked on Twitter for updates. Thank you, Gabriel. Thanks for your time, man.
Thank you, Ian. Great to be here, man. Thanks so much.
All righty. So it's goodbye from me, and we'll see y'all soon.